It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, June 7th, 2016, cruising our way through this second week of the month of June. Our favorite markets are setting up for some excellent opportunities in tomorrow's session. Crude oil, S&P, and gold are all quite bullish, but expecting a small correction. Got a good plan for those here in a moment. While the euro is trading inside of a range, but a potential for seller failure may send that euro right up to the upside, right along with gold tomorrow. Got a jam-packed newsletter in store for you tonight. Before we jump into our charts and put together the strategy for Wednesday's trading session, I do want to remind you the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video, and that'll take you over here to our blog at Sideways Markets. While you're here watching the full-length version of the newsletter, don't forget, if you're not an advanced member here at School of Trade, if you're not a member here at School of Trade, I've got a free pass for you to come out and join me in the trade room as a guest so you can see more about how we trade here at SOT. Right below the video, lower left-hand side, I'll remind you to make sure you join our mailing list. I'll send you an email every evening when the newsletter is ready to go out. You'll never have to worry about missing another newsletter ever again. Just make sure you verify your inbox when you hit the submit button there. I'm going to send you a test email to make sure everything is working properly. Don't forget also, right below the video tonight, you can download all the charts I'm using in tonight's video. Have those ready for yourself tomorrow's session on your computer. And over on the right-hand side, as I always say, you're going to learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. That I can guarantee. Take our free trial membership and learn the who, what, where, when, and why about what it means to be a student here at School of Trade. And if you need any help along the way, I'm always here to answer all your questions, whether it be computers, brokers, data, charting, setups, trading plan, goals, you name it. No question too big or too small. Holler at us on the live support button on the right-hand side of the blog. Hope you're having a great week so far. Man, it feels good to be in the summertime months. Been some excellent trading opportunities over the past few days. Hope you guys are ready for another busy day of learning and earning tomorrow. Don't forget, we're opening up our trade room tomorrow morning at 8 a.m. Eastern time tomorrow with all of our advanced members. I look forward to seeing you there. Take a look, first of all, the calendar for tomorrow. Tomorrow's Wednesday, June 8th. That immediately reminds us that we have inventories tomorrow on crude oil, so we definitely know we have that coming out tomorrow. Looking down at this evening, though, we know we have some news from our good friends in Japan. We get the GDP coming out of Japan. Not typically known to be much of a market mover. Usually the news that we saw, such as last night, we talked about last night's news coming out of China, we don't typically see the needle move too much from the GDP from Japan. It is billed, though, as a Red Star news event, so be aware of that event. It may move the needle a little bit here overnight, but I don't expect there to be too much reaction to it before we go into tomorrow's London session at 3 a.m. We have 3:15. Consumer Price Index, that's going to be the first market moving event tomorrow morning. Honestly, I don't expect the much more than the Swissy to be moved around too much tomorrow. We got the Great Britain industrial production. We're still waiting on the Brexit vote later on this month in Great Britain. We've got some housing starts at 8:15. Honestly, I don't think these events are going to have much impact tomorrow. I really don't. I don't see this having much impact at all on the bigger picture, S&P, crude, gold. Maybe we see a bit of a sniffle. You know, Canada, one of their biggest exports is the black gold, the crude oil. So we may see a bit of a movement in the crude markets tomorrow morning at 8:15. But honestly, though, I don't see anything on the calendar here tonight or tomorrow morning that should really have any big long-term impacts. You know, again, Red Star news will be at 3:15. 8:15 tomorrow morning. I think all eyes, though, especially for crude traders and S&P traders, which loves to mimic crude oil right now, will be focused on tomorrow morning's petroleum status report at 10:30 a.m. Don't forget, the 15 minutes leading up to the petroleum status report is always the most dangerous, and I like to give it at least 10 minutes after the news comes out before I go trading afterwards. So be aware of that. And then we have some major news tomorrow night, consumer prices out of China. Those will be some major market movers. We'll talk more about that in tomorrow night's newsletter. So really, all eyes and ears are going to be on crude oil tomorrow at 10:30 a.m. Everything else should be relatively uneventful as far as published economic news goes. Now, who knows what we'll hear on the headlines tomorrow morning as we open up our trade room at 8 o'clock Eastern time. I'll be doing it right there with you guys live in real time. At least now you know the schedule, though. Again, from in my world tomorrow, the big number will be that inventory number at 10:30 a.m. So make sure you're trading aware of that, right? The best opportunities going into crude oil tomorrow will be get in early, sitting on hands about 10:15, and then wait for that 10:30 number to come out, and then we'll trade the reaction to that report. Promise me, though, you will not gamble away your trade account tomorrow trying to trade that news. We don't trade news. The news is noise, and really the hardest part is that you can't actually use the news event itself, right? You're not going to actually use what came out as the news. Hopefully by now you know that there's no way of using what the news was, the actual news report release, as the trade. It's all gambling. There's very little liquidity. I recommend sit on hands. Give it some few minutes before, a few minutes afterwards, let the dust settle afterwards, and trade the reaction. We have a special chapter in our beginner's course here at School of Trade that talks all about economic news, how we trade it, how we don't want to trade it, and of course the trading calendar on top of that. Enough about that though. We got a plan for tomorrow. We know about news. Let's jump into our charts. We'll go crude, S&P, gold, and we can't forget about our friends at the euro here today. We'll wrap up with the euro this evening. Crude is bullish and most likely trading at the highs of a bull wedge with a goal of expanding this wedge into a larger bull channel. But with a late break higher in today's session, we can assume that a lot of buyers will consider this price way too expensive to buy up here and will be waiting for a trap low to get into this move at a cheaper price. Now, if you watch the market today, what happened? We saw this big, strong move up, right? And that big, strong move up, very big clue, failed to retest the high. When we fail to retest that high, what does that tell us? Look for a trap low. Buyers don't want to buy this high. So we knew every time it priced pulled back to a prior area of support, we see buyers jumping on, right? Buyers buying it up. And eventually the sellers gave up and price took off back to the high. Now, here's what typically happens. Typically, we're going to see right about, these are pullback buyers here, trap buyers, swing buyers. When we saw, usually this move right here is going to be the one that goes back to that high. So what didn't happen today is the buyers didn't get instant gratification like they wanted to and pretty much gave up on it as it sank into lunch and went sideways. What then happened is really what typically happens in a trending environment. Big, strong move like this, the odds are stacked way in the favor of the buyers to revisit that high. But what happened today was, look, it happened in the afternoon session. Not very typical. Not very typical. Yeah, you could probably say the $50 a barrel area got in the way, and it definitely did, right? It kind of sucked that price into this kind of black hole a little bit here, and then eventually it got freed out in the afternoon. What am I getting at here? Well, usually the buyers that make that, right, that make that move, usually they get paid. On this one now, most buyers, we assume right now, probably miss this move. And they're not going to want to buy this high. And so this is what tells me that a lot of the professionals are going to look at this and say, well, yeah, I know it's bullish, but give me some more meat in the bone here. I don't want to buy the high, right? Obviously, this is news. We had 4:30 p.m. news here that pulled it back. Now, with that said, we do have a very strong, what was very low volume, a low volume move. So what is likely is whenever we see a strong move in one direction, which you're going to see an example of this on both the euro and the S&P tonight, crude oil, as you can see, in hindsight, it looks very strong. But, if you notice, it's, a couple bulls, bear, bull, bear, bull, bear. It's not a rocket ship to the moon, and it definitely was on low volume because it was in the afternoon session. And crude oil, like a lot of markets, are weighted towards the morning session. So what do we know about this? We know that with a strong move, we're probably going to revisit that high. In fact, they may go all the way up to that double up target at 50.60, which is drawn up the first two swings of the session. So with that said, if we do find this thing retesting this high, buyers have basically two choices. They can either chase and they can buy high, which in historically speaking is not a very sound strategy, or they can wait for a trap low and then they can buy it after a trap low. So at this point in the game, do I think we're going to go higher? Yeah, I really do, because you can see that strong move up, right? That most recent strong move higher. And I would imagine right now, based on these candlesticks, you can see those candlesticks. They've got some wicks at the bottom. Again, I wouldn't be surprised at all if we come out here in a few hours and we're already up to that 50-60 area. The problem, though, is that where's the big move going to occur? Maybe it keeps going and it goes out of the measured move, and maybe it keeps running forever. This is Crude we're talking about. It may. But the reality is, though, is that if it runs higher here without a deep pullback, you've got to be careful buying that high. Buyers will be looking for a price to trap low and then back up. Trap low and then back up. The professional buyers would love to see it. If it shoots higher here, they'd love to come back, get that price back to that prior area of support, and then back up we go. That's why I say we're at the high of what is probably going to be a wedge, right? Probably going to be a wedge. It might be a longer-term bear channel. Again, see how I've got this long-term bear channel. But this is a really big bear channel. And right now, all we know is we got one big strong leg up, a pullback that really was messy around the 50 area here. And from what I can tell right now, all we really know is it went back to the high. Buyers who held positions were rewarded, but we can assume most of the buyers here probably weren't in that move going higher because, again, most of the time, everything in the afternoon is very unreliable for most of these markets. So we know now that whatever buyers weren't involved with this, they're going to look at this and say, well, do I really want to buy high? If it torches going higher here, it runs right into resistance. If it runs higher, now you're buying high. So if it does run higher, what I'd be looking for is a situation like this, where runs higher, small pullback, don't take this one, wait for a trap low, then look for sellers to try to sell it. Yeah, they're probably not going to be successful, and then buy into their failure, right? So don't take the first one because that's probably going to be a trap. Take the one after those sellers try to reverse it, and then at least you're not buying high. Then you've got the sellers and their stop losses to fuel your position going back up to that high. And of course, your target is right back at that swing. Obviously, the most reliable situation is going to be a trap low, 50-20, 50-19. We may even go all the way back down to 50 for all I know. I mean, we're talking about a very sticky psychological level, right? And if this is a wedge and buyers see it the same way that I do, then they're not going to want to buy high. They're going to want to wait for it to pull back and buy the low of that wedge. Okay, so just a heads up on that. It's probably not going to be a huge undershoot, right? I wouldn't look at it like a big undershoot. Undershoots don't generally occur below the midline, right? This thing goes up and then it fails, sure, that'll be an undershoot. But if it can't even get to the midline of that channel, what does that tell you? What does that tell you? The channel's probably not there. I mean, given, again, it does look like it's a good channel, but it's a real wide channel, and you put it in context, I have to assume here now that buyers are going to be looking for a pullback here. If you're a seller right now, being a seller is pretty tough because as you go lower, you got the low of that channel, the low of that wedge to run into, prior swing, battle zone. There was kind of a triangle here that I had drawn on, 50.05. If it goes back to 50.05, it's going to go to 50 even. Let's be honest here. So the reality is, if you're going to be a seller right now, really until you get below 49.84 and then stay below it, that would be when I would start thinking about being a seller. But everything as it pulls back is most likely here going to be bought, including 50, including 49.84. Again, because we can look at this as possibly a channel, but most likely just a bull wedge that's going to keep trying to run back higher. All right, guys. Again, if it spikes higher in the overnight session, be careful buying the high. It's the lower reliability trade. If it does trap low, that's the one you want to be on because then you'll get in at a cheaper price in a bull market. How about the S&P? S&P is another good example of a strong move. S&P's bullish in the long term, but a strong bearish finish to the session today tells us that sellers are likely to sell the next pullback due to a new low, right down to a new low before the buyers get a reliable chance to buy the lows for a target back to the high. So we are bullish right now, but this real strong, and again, you can look left. I mean, this market is nothing but bullish. But you look left here, or you look at the short term, and you can definitely see that.